Hi, my name's Chris Bunbury with Environmental Risk Managers, and along with Tim Wells of CIC Services, I would like to welcome everybody today to today's webinar on EnviroCap, environmental insurance that pays you back. A couple of little housekeeping to take care of. First, if you can, just mute your microphones. At the end of today's session, we'll be answering any questions that you may have. This is not going to be a very long session today. And everybody's going to receive a copy of today's PowerPoint along with some other information. And the reason is that when I started my career in the environmental insurance industry back in the late 80s, I learned very early on that you do not sell environmental insurance. What you do is you educate your clients on their environmental exposures, and then they can make an informed decision if investing in pollution insurance will add value to their business model or not. So go ahead and sit back and learn why EnviroCap cracks the code on environmental insurance. I want to point out that with EnviroCap, we have two program options available for you to pick from. The first one we have is with an A-rated carrier. So if you have contractual requirements that require you to have a rated carrier, we can meet that obligation. And then the second program that we have is one that's with a non-rated direct written captive for those insureds of yours that maybe are wanting to invest into their pollution coverage, but do not need to have a rated carrier as part of that. So EnviroCap is the environmental insurance that pays you back, and it helps your clients to have environmental insurance coverage with robust limits while owning their own captive insurance company and having the opportunity to have savings up to 60%. Now, we've got some information here on environmental risk managers so that you can share that with your clients and learn a little bit about who we are. And we have the same thing with CIC Services, again, just so that you can get coached up for you and your clients. A little bit of information on my background, how I started in the environmental insurance industry, and then some information on Tim and his career in the captive insurance industry and what he's done. Now, one thing you'll find from environmental risk managers is with any of our educational resources we send out, the very first thing we want to make sure we're all on the same page about is what is a pollutant. Because when you look at an insurance policy, it describes a pollutant as smoke, soot, vapors, fumes, acid, alkalis. Well, I'm not a scientist, and I assume most of the people taking this webinar and those you're going to be talking to are not scientists either. So based upon the way insurance companies and courts have responded to claims in the past, we've come up with a definition we think is much easier for your insureds to understand. And quite simply, a pollutant is a material, substance, or product which gets introduced into the environment for other than its intended use or purpose. So in other words, something that ends up where it doesn't belong. In one situation, we had fresh water. And what happened was that fresh water was accidentally put into a saltwater aquarium. It killed off some of the aquatic life. And when they filed a claim with the carrier denied coverage, saying that the fresh water was a pollutant. In another situation, all places Wisconsin, we had a cheese delivery truck that got into an accident, caught on fire. The cheese melted, went down in the sewer systems and coagulated, and caused for sewer backups. And when they filed a claim, the claim was denied, saying that the cheese was a pollutant. We also have examples with milk and beer and fruit juice, but the bottom line is that a pollutant isn't just some cancer-causing, skin-burning, nasty chemical. It could be something as simple as fresh water. So what we've learned is that environmental risks are becoming more difficult to manage. And as time goes on, these risks are increasing both in number and size, along with emerging contaminants, like today with PFAS and glyphosate that we're dealing with. And so what happens here is insurance rates are increasing, but the current insurance market isn't keeping up with it. So one thing we do know is that as rates increase, coverage is going to be reduced, which means your insureds could lose critical coverage. So bottom line is the vast majority of businesses are not adequately protected for their environmental exposures. So the solution that we've come up with is EnviroCap. And EnviroCap allows you to retain up to 60% of your insurance premiums, obtain coverage that is custom designed just for your unique exposures, And it also creates a new profit center for the business, and it protects their assets from environmental risk. And again, we have two program options for you to pick from. Now, as we all know, in your traditional insurance space, what a business does is they purchase coverage from a carrier, and for that, the carrier issues a policy to them. But a better way to do that in today's business market, we feel, is with EnviroCap. And Tim, would you please walk us through these next few slides?
Yeah, of course. Thanks, Chris. Yes, Chris said this illustrates the EnviroCap program. This program is considerably different from a traditional guaranteed cost type of arrangement, which you saw in the former slide. There are similarities, as you can see. There is the insured business there on the left, and the carrier A, that premiums are being paid to. In this illustration, $750,000 of premiums in exchange for transferring risk. However, what we're introducing with EnviroCap is a captive, illustrated there on the right, whereby the carrier, the A-rated fronting and reinsurance carrier, is ceding premiums. There is reinsurance going to the captive insurance company. So in this case, $450,000, or a significant portion of the premium that's being received by carrier A, is being ceded to the captive in exchange for reinsurance coverage. As you can see at the top, both the insured business as well as presumably the captive are going to be owned by the same shareholders, and they will benefit from the profits of the captive as well as, of course, their insured business.
Oops, I just hit the slide and it didn't go. Hold it just a second. Sorry about that, Tim.
Yeah, thanks, Chris. Yeah, so here we just want to illustrate the layering that you will find within a captive program. This is just an illustration with the numbers here. They're going to vary based upon lines of coverage and various other considerations. But the bottom line is the captive is not retaining all of the risk up to the policy limits. Illustrated here is the captive retaining, or sorry about that, Chris, can you go back for just a moment? Yeah, what's being illustrated here is the captive retaining up to $500,000 per occurrence and $1 million aggregate. Over and above those limits, the rated carrier is going to be the recipient of those claims. So there is very much a backstop behind the captive. This is a pro forma, an illustration of why the EnviroCap program is better than a traditional guaranteed cost arrangement. What we're illustrating here are premiums of $750,000, $500,000 of which, and I'm going to run down through year one. As you can see, there are $500,000 of GL premium combined with $250,000 of pollution premium for a total of $750,000. Fees and commissions are being taken out, resulting at $500,000 of net captive premiums. Then you will see that amount reduced by claims and claims related expenses, arriving at that $201,000 number. So in year one of $750,000 of gross premium, over or approximately $200,000 is being retained by the captive, which is approximately 25% of the total premium spend. And why this is significant is because this is really akin to going back to your insured client with a 25% premium reduction, because in a captive scenario, they are retaining in their captive that $200,000. And as you can see, we have illustrated this out through year 5 and totaled these numbers through 5 years, resulting in, at the end of 5 years, nearly $1.3 million that the captive has retained and essentially put back into the pocket of your insured client. So Chris mentioned earlier the second program within EnviroCap, and this is a what we're calling a direct issued program, whereby policies are being directly issued from the captive to the insured. So in other words, there's not a fronting carrier involved. And that's illustrated here. As you can see, the captive there in the center of the page, receiving premiums from the insured and issuing policies to the insured business. Again, the captive is not responsible for all claims up to the policy limit. There is a reinsurance company, the EnviroCap Reinsurance Company, that's standing behind the captive. Again, that's illustrated here by layering, the captive taking on that first retention layer, and then the EnviroCap reinsurance pool covering the balance. Again, a pro forma illustrating why this is a better arrangement. Here we've taken an example of $250,000 of premium. There are no fronting fees here. These premiums are going directly to the captive, so there is less cost in this scenario for fronting and reinsurance. You see $210,000 of net premiums received by the captive. You will see the claims, IBNR, actual paid claims, claims-related expenses, resulting in $87,000 of underwriting profit to the captive. And again, as you look at that out over a period of 5 years, nearly $600,000 remaining or being retained by the captive, and correspondingly the business owner, the owner of the captive.
So some of the coverages that we have available in EnviroCap are site pollution coverage, contractors pollution, and something I'm really excited about, having general liability available, because you may not have somebody who's spending, you know, the $250,000 or $750,000, depending upon which carrier captive program you want to go to. But if you bring the general liability equation into there, all of a sudden it's going to open up a much broader spectrum of potential insureds to look at EnviroCap. We also have products pollution, transportation, professional liability, non-owned disposal sites, storage tanks, product recall, legal fees, emergency response, and so much more. And a partial list of candidates for EnviroCap. We just give you a list here. Again, this is just a partial list. We want to just kind of give you an overview. As I like to point out, when I got started in the environmental insurance business, we were selling exclusively to asbestos abatement, lead abatement contractors, hazardous waste haulers, landfills. That's all yesterday's business in the environmental industry. Today, your everyday standard commercial insureds are what are driving the environmental insurance premiums. So how do you obtain coverage through EnviroCap? Well, very simply, you're currently helping your clients to handle their insurance coverages. All of a sudden you discover that they have some environmental exposures. You simply reach out to Chris, myself, and we will get that process started and bring in our team at CIC Services. And what we're able to put together for you at the end is a very unique program that's customized just for your insureds and the opportunity for them to get paid back.
Yeah, so we'd just like to highlight a couple of items here to give you some parameters and some additional information. So for the fronted program, the carrier does require a minimum of $750,000 of premiums. That is pollution combined with general liability, a minimum of $750,000. If you're looking exclusively at the direct written program, where again, a rated carrier is not required, then we can go as low as $250,000. The formation fees for the captive are going to range, as you can see here, somewhere between $40,000 and $75,000. That's for the one-time setup cost of the captive. There are potentially two other obligations. There will certainly be a capital obligation. The captive will need to be capitalized, and that will be determined by the domicile regulator. Oftentimes that is in the neighborhood of $250,000, being satisfied by either cash and or a letter of credit. Collateral is not going to be required in the direct written scenario, but of course in the fronted scenario, collateral would be required by that fronting carrier, and based on a number of variables, the collateral can range anywhere from 25% to 150% of the first year premiums.
So in conclusion, what we'd like to point out is that EnviroCap allows for you to custom design unique coverage just for your individual insureds. It allows for you to design your policy language, and it's tailored just to the specific needs that your insured has. Thus, what we're able to do is overall lower cost and create a profit center for your insureds to be able to get paid back for doing a good quality job of running their business. Would like to thank everybody for attending today, but before we stop, we'd like to take a moment and answer any questions there might be from anybody in attendance.
Hello, I have one question.
Yes.
Yeah, absolutely. Go ahead.
On the presentation, so these are set up as pure captives, is that not in a cell captive formation, or?
That's correct.
Okay.
Yeah, it is a single parent captive. This is not a cell structure, nor is it a group captive structure. It is a single parent or pure captive. Yeah, great question.
And if I can expand on that, Tim, the reason that we did that is because this is new to the industry. And instead of starting out with a group, we wanted businesses that can show that they can stand on their own. Now, down the road, as this evolves and develops, we may have that option available. But we wanted to start out keeping it single. And the reason, too, behind that is that your environmental losses tend to be a severity versus a frequency issue, which is really an ideal setup for a captive. And that's what captives look for in that particular type of risk.
Thank you. I appreciate it.
Yes. Any other questions? All right, well, we would certainly like to thank everybody for attending today's webinar. If you've got any questions at all, please let us know. As we said in the beginning, we will be sending to you a copy of this so you can use this as an educational resource, and we have some other material be forwarding to you. And please do not hesitate to reach out and call with any questions. The only rule I have in my environmental business is that there's no stupid questions, because I've already asked them all to get to where I am. So thank you for your time, and have a great day.